Welcome to the pre-market analysis of Nifty 50 for today. That means it is 15th of January 2025. Now, what we need to understand here is yesterday we saw a market which tried to go up despite a very good Q3, quarter three results of a lot of companies. So that was a good result yesterday, though the market could not jump that high. Now, in front of me, that is a 1 day chart. We'll clearly look at it, okay? This is basically a candle of a day, 1 day candles, 1 day time frame. Why I'm keeping it here is because whenever the idea of a time frame is whenever there is a significant event happening, we tend to see the larger view. We tend to see the macro view of the economy, macro view of the market. Currently, we are trying to see the macro, bird eye view of Nifty 50. Look at it currently, okay? The market showed this on June 4th, which is our exit poll results of 2024. Now, the market is currently trailing around 23,100 ish, which is here. We need to understand that this level is a very crucial point. This level is a make or break point. Why is that? This is because if you keep a support here like this, you might see that yesterday's daily candle is closing below that support, below this support. Any candle of yesterday, which was 14th of January, if yesterday's candle, which was 14th of January's candle, daily candle, this candle is basically of 13th of January, this candle is of 14th of January. If this daily candle would have closed below this one, then it could have been a loot for players in the put side. Buyers would have looted the market because there is a fair value gap. There is a clear fair value gap, and we will fail to create supports here. What I'm trying to say, yesterday's candle, which was a daily candle, saved the day, saved the month, saved maybe the year. Now, what is to watch out for? One thing is to watch out for here is 23,000 level. Yesterday also we made 23,000 as a very important, very significant support. Before that, I'll let you know what has happened yesterday and today, which will inflict and which will diverge today's market. What will cause today's market to go up or down? Now, GIFT Nifty traded around 23,300, indicating a very positive start to Indian stocks. Okay. Asian market traded higher. We need to understand why. The reason why is because a US market, yesterday US show a very good PPI result. It was more and better than expected. Crude oil prices also rose. So that is also very significant. Now we need to also understand that there are a lot of stocks in India during the Q3 results, quarter three results are blooming, are showing good results. So that is also a very important part to see. Next, we need to understand what is Indian rupee doing right now. Indian rupee is literally hitting its record low every single day. It is 86.65 rupees against US dollar. It is every single day it is weakening. So it is not really a good sign for India, not a good sign for Indian market, not a good sign for imports, not a good sign for inflation. We all know the cycle of all of it. What will happen if the Indian rupee depreciates? What will happen to Indian economy, what will happen to inflation, what will happen to RBI rates, and what will happen finally to our market. There is a very straight relation to all of it. Now, we need to understand what happened yesterday in Nifty 50. It rose by 0.4%, snapping basically 4 day losing streak, but overall sentiments actually remains bearish. Now, what we see here is a doji candle. This candle, daily candle, is a doji candle. This doji candle indicating a indecision in the market. Now, this is also very much important to understand the key resistances here. The key resistance here currently is 23,200, which is very, very significant. 23,200 is a very, very significant resistance, and 23,000 is a very important support. There are two levels to watch out for, 23,000 and 23,200. Anything above 23,200 is 23,000. So do not think to go totally bullish if the market basically goes up 23,200, because if the market goes up 23,200, we might see a very near term support, near term resistance around 23,300. It is very much clear to me and clear to you, should be clear to all of us. So in this market, do not try to go a lot bullish. Okay, this market is basically a bearish market. Now, what we see here is, if why the 1 day time frame is here. 1 day time frame is here to basically see what will happen to the market if we draw a Fibonacci retracement here. Now, what if I draw a Fibonacci retracement line? Where is 0.618? The 0.618 line is lurking around 23,000. It is lurking around 24,350. This is our Fibonacci retracement line. Okay. We will also try to see what happened when the market started a bullish run. The market started a bullish run here, okay? 25th of October 2023. Now from here also we'll try to make a bullish Fibonacci retracement. Here the bullish Fibonacci retracement shows 21,687 as to be one of the most significant, very significant Fibonacci retracement line. We can also see this to be tested. If this is getting tested, then oh my god, what will happen to Indian market and its psychology? Because people will think it to be a crash, which it is not. Basically, it is going to be the correction of the imbalances which has been created by the market itself. So we need to just chill, understand the levels, trade with the levels, not do anything very smart, or we don't have to do anything dumb. Okay, because over smartness is dumbness at times. Now, we need to go to 15-minute time frame just to watch out for something very important. The important part here is that if I tell you that at this very moment, 15-minute time frame is showing lower lows and lower highs, it is very much visible, okay? Lower lows and lower highs. Why it is showing a lower low and lower high? Just look at it, okay? Now, here I go. Lower low, lower high, 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 lower low. Potentially, if the trend continues, then lower low and lower high. This can happen. If the trend or there is a break of structure, then the market will break the structure of lower high. It will create a higher low. It is just how the market goes. So this is one scenario that we need to understand. This is for 15-minute time frame. If you go back to 1 hour time frame, what we'll see here, we'll see a consolidation point. We see a very important consolidation point. So the market here, if we remove the drawings, and we need to understand what the market is doing in the 1 hour time frame here. If we take out our rectangle out, which is this, if we draw an important box, which is this, like this here, we see market is ranging for the last 3 months. 3-4 months the market is ranging. This is the range of the market. The market is not able to move anywhere else. This is the discount zone. That means people are buying here, and the market people are selling in the premium zone. What is a premium zone? This is a premium zone, the red line that you see here. It is very clear. Before also, if you see before when the whole trending day happened, trending month happened, September, and the end of September, market hit his all-time high. Before that also, the market basically was ranging around this level only. So it is nothing new. The market is ranging around this level. We don't have to be very much surprised. I will not be surprised if I see this in the market. I'll not be surprised if I see definitely like market is showing this. Okay, now let's imagine. Here, market went up, made the all-time high, came down. Market is basically creating head and shoulder patterns. Okay, now market is doing nothing. Market is just consolidating. Market is just going sideways for the last whatever years, whatever months that we have. It's just around 8-9 months, and we don't need to be very much cautious about it, because this is how the market goes. Now, this is how the market is currently going. It is basically a range, nothing else. We need to be very much concerned if this range that we see here, this range is getting broken, because this range will immediately make us view this fair value gap. This fair value gap will be challenged, because this level is very much important. We need to also mark this as an important support. This support is going to be our Lakshman Rekha here. Now this is very much important, and if that happens, if that is broken, then hallelujah. But anyway, it might not be broken. We need to be very much cautious. The sellers, what you have to do here, that this market, if it tends to open with a very high gap up points, like if it opens with 200 points gap up, try to just sell the straddles. If the market opens with a very good gap down, do not sell, do not be a seller here. Try to be very cautious, wait for the retracement to happen, and then buy your puts. Be a buyer then, because if the market goes too up beyond its limit, which is basically 200 points, 250 points, with a gap, it starts with a gap of 250 points, then you have the opportunity to sell. You can sell the overvalued premiums. It's on you. But we need to understand what our perspective for this market can be. Our perspective for the market can be level oriented. It should always be level oriented. Okay. The top level trading is psychological trading. The third level trading is basically going with the indicators, going with the tools and everything. Okay. The top level trading here is going to be your psychology, your mindset, and how you're able to perceive the market as it is showing you to be. How you're able to understand the market, how you are able to see that people are trading in this market with a human psychology that you also have. If you have what you have, and if you have what they have, you know what they can do. So you know what these 93% people can do, because you are one of the mindsets. What you need to do here is you have to detach from the mindset of a human being. I've been saying very continuously and very firmly for a long time that this market is not for those people who are having emotional human side. We are all human beings, we have emotional sides, okay? But we need to contain and tame it. Tame it to its best, that once you understand that detachment is the key to earn money in the market. It is very sad to know, but if you detach yourself from the idea of money, you will have money. If you detach yourself from yourself, you will have yourself. If you know, you know. I will sign off with this thought in your mind, starting your day. May Lord Krishna guide us through. Have all the positive results that you aspire for. Thank you so much.